In 2018, a study by Making Finance Work for Africa suggested that health microinsurance could enhance insurance adoption in Uganda, especially if the country avoids implementing a mandatory national health insurance system. Affordable microinsurance policies could provide a comprehensive coverage for the underserved populations, serving as a promising approach. The 2022 Insurance Annual Report shows a slight decline in revenue from 0.657 billion shillings in 2021 to 611 billion shillings in 2022, prompting collaborations like IO Insurance with banks and MTN for market access, without appropriate methods backed by minimal capital requirements.
Like the regulator will tell you, working very closely with them, we're able to actually price at a point where the benefit also makes a lot of sense from an actuarial perspective. But the intention really is to make sure that the products are affordable to the end users, because we know the market we are dealing with. Not everyone can afford, expensive products. But how do you then reach to these customers who have previously been unserved by simplifying and designing products that they can afford, and also figuring out a way of distributing those products through partners that they're already working with. If you work with a bank, for instance, Centenary Bank, and you take a loan from them, or you have a savings account, if they come to you with an insurance product of 1,000 shillings, it will be very easy to buy it.
For conventional insurance, the capital requirements are a little bit low. And going forward still, we are revising it, but still it will be lower than conventional insurance. And some of the other requirements, like for principal officers, audit committees, control functions, they are at a lower level. So that encourages investors to come in and invest in the market.
Without appropriate methods to cope up with financial shocks, 14 million low-income households are pushed into poverty every year due to out-of-pocket health expenditure, which the State Minister of Investment and Privatization demystifies.
To access credit, or access money, or grants. And that's why we started the parish development model. But this is putting money in the pockets of the people, but they will not remember that they actually have to get insurance. They will not remember that, because they will remember when people get money in my villages, what I see them do is that they will remember to get the second wife, third wife, but not remember that they have to save money for death, health. Most cases is health, and then we start selling our buildings. I know of even prominent people, when they fall sick, they sell everything, because then they do not have money to sustain themselves in those hospitals. So that is where health insurance comes in.
Further research reveals that Kenya's insurance penetration stands at around 3%, which is twice that of Uganda's meager 0.8%, remaining below 1%. The regulatory authority has pointed to this as a hindrance to the industry's progress. Additionally, the shortage of actuaries contributing to underpricing and overpricing is also identified as a growth-limiting factor.
Penetration here, which is approximately 0.8%, compared to our counterparts, Kenya, which I think are around 3%. Kenya has a national health insurance scheme, which we are still developing. We are assuming that once we also do our national health insurance scheme, it will further increase our insurance penetration. If we do more sensitization here in the country, we'll also be able to increase our insurance penetration. If the IRA and other stakeholders improve on them, I know if you look at the progress reports coming through, the claims ratio is high, but even that, they are trying to pay the claims. They have tried to pay the claims actually. They can still do more. If you work on the claims payment, more sensitization, also introduce the National Health Insurance Scheme, we insure government assets, and then we also try to ensure that people in Uganda appreciate insurance as a fallback position.
What we have decided to do is that we outsource. We allow these insurance companies to outsource. There are many actuaries in Nairobi, in South Africa, who are being outsourced. And most of the products, all the products which are submitted to us before approval, are subjected to actuarial review. That means the prices are appropriately determined. I think when that person was talking about actuarial pricing, lack of actuaries leading to low prices also, he did not take into account the mitigating factor that we have put into place. But already we have a number of graduates who are enrolling from the university, who are doing BSc Actuarial Science. There are many that are doing Masters in Actuarial Science, and there are many also doing professional courses. So going forward, maybe in the next 5 to 10 years, that will not be a problem to us in the industry.